Welcome to Financial Clarity, the podcast dedicated to helping service-based small business owners achieve financial success. Join us as we demystify financial concepts, get practical tips from seasoned entrepreneurs, and discover strategies to increase profit and value. Hannah Smolinski here. I'm the host of the Financial Clarity podcast, where I chat with successful entrepreneurs, financial experts, and leaders in the small business community. The episode today is going to be diving into a topic that many small business owners have struggled with, and that's the relationship between their bookkeeper and their tax accountant. If you don't fully understand what those roles are, I want to encourage you to pause this episode and actually go back to an episode called Understanding Different Accounting Roles in Small Business. I posted that back in October of 2023, and that is an episode where I helped lay the foundation for if you aren't sure which role you need in your business and what these different people are doing in your business, you might want to go and check out that episode. If you want to find that, we'll make sure to put that in the show notes. And then you can also listen to that wherever you listen to your podcasts. Today's episode is brought to you by Clara CFO Group. Clara CFO is a fractional CFO agency dedicated to supporting growing B2B service companies. If you're looking to uplevel the financial strategy and leadership in your business, visit claracfo.com to learn more. I met today's guest during the pandemic. I met her online, but since then we've been able to meet in person at a few different accounting conferences, most recently at Scaling New Heights in Orlando. And I can tell you now that you're going to love her just as much as I do after listening to her today. Today's guest is Nancy McClelland, better known as the Dancing Accountant. Nancy is a CPA who's been on a lifelong mission to support small businesses and their communities, as well as to educate the professionals who serve them. She runs Ask a CPA, which is a Q&A membership for bookkeepers who want to learn how to prepare tax-ready books. And she was also named a top client accounting service pro advisor and one of the top 50 women in accounting. Check out her blog at thedancingaccountant.com. Nancy, thank you for being here.
Oh my gosh, that was the warmest welcome, Hannah. Thank you so much for having me here. I'm so glad that we met online during the pandemic. I mean, I'm not glad about the pandemic, but I'm glad it brought us together.
Yes, I know it was a crazy time, but I made really great friendships during that time with other people who were kind of in the same struggle that we were. I mean, I was posting videos, you were posting all these blogs about how people should be thinking about the PPP and these different programs that the government was rolling out. And so I feel like we were able to kind of connect on that and also be like, hey, you're thinking about this way, I'm thinking about this, like, are we on the same page? Like I mean, people go to your blog to learn about this stuff, and you've been blogging for a long time, right?
Yeah, as a matter of fact, I'll be celebrating 10 years next month. Can you believe that?
That's amazing. That's really amazing. But
It
your
really
your
is.
blog has got so much great information on it. And
Thank
like
you.
when I popped on there after we met, I was like, oh my gosh, there's like so much great information here. And
Oh,
then I'm glad
well,
we've been able to become friends.
yeah, it was such an isolating time for so many people. But when you were able to sort of reach across the room and find somebody else who was doing who's doing the same kind of thing that you were doing, that you and I are both trying to help small businesses survive this, giant disaster. Um, it it took something that had been really isolating, and you developed these extremely strong bonds because you
Mhm.
were like, oh gosh, I'm not actually alone after all. And I felt that way about the AICPA town hall, which is kind of hilarious. I actually have my AICPA town hall water bottle right here
Nice.
that Lisa Simpson gave me. But it was that same kind of thing where I found, oh gosh, I'm not alone after all. There are other people who are struggling through this extremely dense mess of legislation. And at the end of the day, we're all trying to help small business owners. And it was such a delight to finally connect with you in person after all that time.
Yeah. Super fun. Um, I could say, okay, so we're going to get into a topic here about, and to help people understand what accountants should be doing partially, and also just like what the different roles should be doing, especially when it comes around time for taxes. But I
Mhm.
would like you to start out and explain, you are a CPA,
Yes.
but what kind of accountant are you?
I am so glad not only that you asked that question, but that you you referenced earlier that October 2023 episode about roles in business, and the different types of folks you might have in your life in terms of finance and accounting and so on. I actually have sent that out to clients to explain to them. They'll be like, wait, who's who? What's what? And I'll be like, you know what? There's somebody who's already explained this really well. I don't have to reinvent the wheel. And I will just send them a link to your episode on
That's
that.
awesome.
So
Thank you.
yeah, well, thank you. You make my life a lot easier. I am a CPA, and interestingly enough, I never was pigeonholed into a lot of the roles that CPAs sometimes get pigeonholed into because when I first started out, I actually started way before I became a CPA. I was the business manager for a school for the performing arts. And then after that, I was the business manager for a famous violin making studio because my undergraduate degree was in music education.
Oh, I did not
Isn't
know
that
that.
amazing? Yeah. So I started off there, and what happened was, um, the places where I ended up working at were with artists, right? They were with musicians. And wow, they just were not the most organized people in the world. And I was a very organized person. And so there was a job where the job description was teaching music theory to students part time, and the other part of the time being the business manager. And oddly enough, I was the only person who applied for that position. And it was in that experience that I actually realized what my true calling was, which was to actually help small businesses succeed. And so because of that, I didn't come up through a traditional CPA firm, so I never saw how it was quote unquote supposed to be done.
Mm.
And thank goodness I never saw that because what I ended up doing was once I started doing bookkeeping and then moving into staff accounting and then a senior accounting role, but within these various organizations, um, I realized that I wanted to start my own business doing bookkeeping and tax. And again, I didn't realize that at the time that was not a typical thing. You see it more often now, it's becoming very popular, but I'm pretty sure I started that trend 23 years
I
ago.
love it.
So we provide what I call the full arc of services. We do bookkeeping, accounting, tax, and advisory. And so we don't do taxes for folks who are not bookkeeping clients of ours. And we don't provide advisory services for people who are not tax clients of ours, et cetera, and so on. We're really kind of looking at everything in a very holistic perspective. And for me, that just makes sense. I was very surprised when people started talking about bringing client accounting services into CPA firms. And I was like, what? Why, why has it not always been this way?
Mm.
And it was in examining why it hasn't always been that way that I started realizing what a terrible disconnect there's been in our industry between bookkeepers and tax folks and advisory folks.
Hmm. What That's interesting because I've never really worked in like a bookkeeping firm either. Like I
Mhm.
went from like, you know, doing the audit track, I went to and I did that like traditional, kind of CPA sort of funnel from school
Right.
directly into a firm. Um, and then, those types of firms, it kind of makes sense. They're not allowed to do, if they're doing the audit, they can't also prepare the books, right? So
Yes.
that's kind of like a
Yes.
different thing. So I wonder if
And
maybe
that
that's a
does make sense
legacy.
when
Um,
when you're talking about why some of these divisions exist. There are some historical reasons for it that actually do make sense, but there
mhm,
are also a lot of reasons that some of these other divisions don't make sense. It's just
mhm.
we've always done it that way.
Yeah. And now, especially that we have all the technology where everything's digital, I feel like that, we're
Absolutely.
also able to do a lot more outsourced than we were, maybe 30 years ago. So,
Absolutely. Yeah.
um, okay, I sat in a presentation recently at Scaling New Heights when we were there of yours where you were talking specifically to bookkeepers, and I probably some other tax accountants were in there as well, but like kind of geared towards bookkeepers and how they can prepare what you called tax ready books
Yes.
in that. And so, can you explain to our audience what that means? What do tax ready books mean?
Well, first, I want to thank you for coming to my talk at Scaling New Heights. That is really, really nice of you. It was so good to see you in the audience there. We had like 150 really enthusiastic folks who really wanted to learn to level up and prepare tax ready books to learn what that means and then figure out how to do it. So, as I said, I never knew about these traditional roles in firms where we do this, we don't do this. For me, it's always been like, well, if you're going to do the taxes and you want those taxes to be accurate, it makes sense for you to have also done the books because then the books are right. It's kind of astonishing what some colleagues of mine will end up having their clients will submit to them, and they'll be like negative items on the balance sheet, or the payroll taxes don't come anywhere close to tying out to what it should be compared to the salaries and wages. I mean, there are a million different things that they look at them, and they have to know these books aren't right. There's no
Mhm.
way that these books are right. Tax ready books to me means doing what we do internally. Again, we've got this amazing um, we're very, very lucky to have an amazing team that has been very patient with me when I say, hey, you're not just quote unquote a bookkeeper, and you're not just a tax preparer, and you're not just anything. Everybody, all of us have the magical superpowers to be able to do a lot of these things and cross over into each other's worlds. And what I want, again, for us internally, and this is why the education that I've been providing to bookkeepers, for example, at Scaling New Heights at the session where you attended, is that I want for other people externally to be able to do what we're doing internally, which
Mhm.
is tax season is a terrible, terrible time of year to look at messy books and decide we're going to clean up a year's worth of stuff right now.
Mhm.
It's a it's gotten more and more stressful over the past 8 years approximately, probably longer than that. Taxes are more complicated than they've ever been. Um, and there aren't enough tax preparers to go around. There simply aren't. And so everybody's overwhelmed. Tax folks, as is the case with other types of accountants, such as bookkeepers, and those that provide advisory services, such as yourself, we love to help people. And so we say yes, even when we should maybe be saying no because our dance card is already too full. And so what
Mhm.
ends up happening is that you end up with all these messy books during the time of year when you are least able to really properly deal with them.
Mhm.
And so you end up with a lot of tax folks just cramming journal entries into every crevice and not paying attention to the proper workflow and just doing anything they can to get the books good enough to be able to put those numbers on a tax return and get it out the door. Tax ready books would be the opposite of that. Tax ready books is throughout the course of the year, a bookkeeper is taking care of the books in a way that on a monthly basis, certainly on a quarterly basis, they are making sure that there aren't any duplicate transactions. They are making sure that all of the balance sheet um, accounts have been reconciled and that they tie out to some sort of source document.
Mhm.
They're looking at the profit and loss and making sure that key accounts that need to be reported in a particular way on the tax return, such as, for example, meals, are most of the time only 50% deductible. Firm function, however, like your annual holiday party or company picnic, that's 100% deductible, even though you might be paying for meals in there, right? You don't want those sitting in the same account
Yeah.
because then the tax preparer accidentally lumps them together. They have to do extra work during tax season to separate those when it would have been really easy to do that throughout the course of the year. So you're making sure that accounts that are on the profit and loss are being basically that they're set up in such a way such that when you hand these books off to a tax preparer, they have to ask very few questions and do very little cleanup. And you might think, well, that's really nice for the tax preparer, but we need these books to be making real time business decisions. I agree. These are also things that will, if you're doing them on a monthly basis, that will actually help you create books that tell the real story of your business, and they'll help your advisor make good decisions, and they'll help your bookkeeper stay on track, and they'll help your tax pro maybe do revised tax planning on a quarterly basis so that you know how much to pay in for your estimated taxes. So it's not like the only reason for it is the compliance of that tax return, but it sure doesn't hurt.
We just had this happen where a client was trying to get their books to, like, they'd had a lot of cleanup. They were a fairly new client for us, a lot of cleanup, trying to get their books to the CPA. And then there was a pretty significant, like, negative credit card balance on
Aha.
the balance sheet.
Yes.
And what did that mean? That meant that there was actually missing expenses in the books. So when we went back and we found all of those statements that had never been given to the bookkeeper, and for
Hmm.
whatever, it kind of got sort of brushed under the rug for quite a while. It that credit card ended up turning out to be like another $15,000 of expenses
Oh my
that
goodness.
then we were able to get those on the P&L and lower the taxable income. But, like, that was a good thing to find that. But
Yes,
also,
it's not
like,
just about compliance. It actually saved them a ton of money in their taxes.
exactly. If you're seeing negative balances on things that should not have negative balances on the balance sheet, that's a really big indicator. But with that, it was also happening right before the September 15th deadline. And it
Oh
was
gosh.
super stressful for the client who was desperately trying to get these statements from a bank that was being very uncooperative and asking her to pay for just statements that were only a year
Yep.
old,
Seen that happen.
ridiculous things like that. So,
Absolutely.
all those things. And what happened is that they actually missed a deadline because this one bank account hadn't been taken care of. So it was like, just this one little thing that could have been done,
There's
12
no
months ago.
reason for that to have waited until right before the September 15th
Exactly.
deadline. This kind of thing, honestly, this should be keeping small business owners up at night. If you're not on a monthly basis getting tied out financials that make sense and are clean, which I recognize is hard for a small business owner to know whether or not their books are clean. But if we can train the bookkeepers to know whether or not the books are clean. And if we can get the tax pros to actually collaborate throughout the course of the year, if we had these folks working with each other to coordinate, then you don't have these last minute things going on. You don't have duplicate entries, duplicate expenses or missing expenses. You you have a major lack of accuracy in the books when you're not thinking about the compliance of the tax return at the end of the year. And again, I'm not saying we should be doing this because of the tax return. There are lots of other reasons for it. But if we let what it needs to look like in order to get an accurate tax return sort of guide what it is we are doing throughout the course of the year,
Mhm.
have that sort of be our North Star and have tax ready books be our goal, then everybody is going to benefit because you're going to get better advisory services.
Mhm.
You're going to actually end up with not just more accurate books, but less expensive books. How much did it cost that client in terms of time and money to frantically pull all of that stuff together at the very end and have somebody come back in? I mean, like we in our own firm, if the client doesn't give us their obviously we're taking care of their books, but there are other things that go on your personal return that we need copies of. If
Mhm.
they don't get that stuff to us by more than a month before their return is due, they have to pay an extra $145, and there's no guarantee that we will get them done by the deadline. They will very probably end up with an extension. That is unnecessary. That's absolutely unnecessary. So doing this throughout the course of the year and having the tax pro and the advisor and the bookkeeper all coordinating with the business owner, it doesn't just lead to more accurate books, it leads to less expensive books and
Mhm.
no more, panicky emails from the tax pro during tax season saying these books aren't right. There's a negative balance in your credit card account, which is impossible. It
Mhm.
would mean the credit card company owed you money. It
Yeah.
doesn't, that's not a thing.
Not usually, no.
No.
And then there might be a double payment, but
Yes, that's
yeah,
true.
I think that's a really good why. So I think we've talked about this before offline, but I think small business owners, when they're hiring a CPA or they're hiring a bookkeeper, they assume that they've done their job,
Yes,
that they've hired a person to take care of this. And why? And then when a question comes up at tax time and it's panicky and it's like, hey, I need this, I need this, I need this. And then the bookkeeper says, oh, well, that's I wasn't hired to do that, or that's not my
right.
job, or
Not my job.
I didn't get something from you, business owner.
Yeah, it could
um,
be that you haven't gotten something from the business owner, or it could be that you've been trying to reach out to the tax pro throughout the course of the year with questions and they didn't write you back because of
they're
whatever
busy.
reason. It can sometimes be really hard to get a hold of tax professionals. Um, and then you try to get a hold of a tax professional during tax season, and that's impossible because
Right.
yeah, yeah. Unfortunately, as you're mentioning, the client, they're often sort of blissfully unaware of what the functions are of these different roles. And, um, sometimes they even absolve themselves of the responsibility. Like, I know that in the finance function that you're in, um, they're not absolving that role to you. They're supposed to be delegating that role to you,
Mm,
right? And so I think lots of times small business owners, they don't realize that this is their business, and that means they have to manage this relationship. And if
mm,
they don't want to, okay, they don't have to. But here are the risks if you don't manage that relationship.
mhm.
And I think that this is really surprising to a lot of business owners, but in our industry, there are very few standards about who should own each responsibility.
Yeah,
And so at the
it's
end of
very
the
true.
day, this really sits in the business owner's lap. It is your business, and therefore, um, it's going to come back to you. If you're right before that deadline, you might be mad at the bookkeeper because they didn't take care of this, or you might be mad at the tax preparer because they didn't coordinate with the bookkeeper. But they're probably both going to be mad at you too, because they're going to be like, well, you didn't tell us that we were who was supposed to be doing what. You didn't set expectations. You've never introduced us to each other. There are a million different ways that can go wrong. And I
Mhm.
just think as a business owner, it's really important to remember that at the end of the day, it's your business. This sits in your lap. You really need to be responsible for coordinating this relationship between your financial professionals.
Mm. I think that they oftentimes don't know that.
Yes.
They might think that that there's some sense of when I've hired this role. I think that's a good point about like, are you really delegating it? To delegate something, you have to understand what the responsibilities are.
Yeah.
And I think sometimes people, especially in finance, I feel like this happens when people hire someone to just take care of it, but they don't
Hmm.
fully understand everything that's involved there. Like we
That's very
we
true.
have talked about like, well, like you said, the standards are not clear. Like a bookkeeper could be the person who's in your QuickBooks, like actually classifying transactions, doing your bank reconciliations. But that bookkeeper could maybe also be sending your invoices or following
Absolutely.
up on accounts
Yeah.
receivable. They could be paying your state and local taxes for you. They could be potentially even like filing an annual report for you, which, sometimes sits with a lawyer, like as an
Yeah.
agent. So, a bookkeeper's roles can expand or they can be very narrow. I've seen bookkeepers who get hired to literally only do account reconciliations
Yes.
and they're doing none of the classifications whatsoever. So, you really need to understand as a business owner what you've really hired your bookkeeper to do and what
I
is
agree.
under their responsibility and how that also can, inform or help you understand what your CPA is doing for you. Um,
Yes. I mean, it is really important for us all to remember that business owners, they don't know what they don't know,
mhm,
right? I mean, that's why they're coming to us in the first place. So
mhm.
we need to help them.
Yeah.
We need to help them, but we need to help them learn what these various roles are. And we need to collaborate with the various people who are in charge of them to say, who's doing this? Who's doing this? Who's doing this, right? Like the business owner likely doesn't know that there's a gap in communication between the bookkeeper and the tax pro. They think, and this is maybe not accurate thinking, but they think the tax pro simply does this once a year thing.
Mhm,
And that is the limit of their engagement. And they think that the bookkeeper is taking care of everything else. And that's simply not true most of the time. At least it shouldn't be. If they're collaborating and you're having, let's say, a quarterly meeting with everyone, maybe the business owner is going to think, well, I can't afford that. Well, it's going to be a lot cheaper than trying to deal with, let's say, a sales tax return not getting filed because
mhm,
it turns out nobody ever owned that responsibility. However, if you get your team, they don't think of themselves as a team. That's very important for small business
mm,
owners to know. They do not think of themselves as a team, but you, the business owner, you can set that tone. You can establish a culture that says, I think of you as a team, and you know that I don't know all the things that I don't know. But between you, people on my team, on my finance team, I've got my advisor, my bookkeeper, my tax pro. You might have your lawyer. You mentioned the annual report. Maybe your BOI is being filed. Your beneficial um, ownership information report might be filed by your lawyer as well. Basically, anybody who touches any of these things, they need to be able to talk with each other, and you need to encourage them to be talking with each other because then you could potentially have a list of what all of these things are. And then you, as the owner, you're not absolving that responsibility. You're working with your team to make an accountability chart, for example, and say, who's taking care of this? Who's taking care of this? Who's taking care of this? What are the dates by which they're
mm,
due? You don't have to create that chart. Your team, they're the experts, but they need to talk with each other and with you to help you figure out what are those items that should be on the to-do list and who should take ownership of them.
mm,
It also makes, figuring out your pricing with these folks a lot easier because you've got really clear expectations. Everybody knows what's in scope and what's out of scope.
mm. That's a good point. Yeah, and you don't wanna also double pay, like,
Right.
I mean, I've seen that happen where, potentially somebody has a CPA that does, maybe they've added on CFO services, quote, unquote, and then they
Hmm.
hire us, and then the CPA, CFO services don't necessarily make sense to be, like, paying for those if
Right.
we've got a CFO who's actually like more actively engaged in the business on a regular basis. So, and that can happen with, things like your sales tax returns, for example. That's a really good example, or these local taxes, or
We have a bunch
you
of
know,
weird local taxes in Chicago. We've
oh,
got a bag
local
tax, we've got a
taxes.
carbonated beverage tax.
Yeah.
It's just astonishing the number of different taxes. We have a restaurant tax. And this is definitely something where I remember a client of mine who they wanted to work with me. They had, said, "Oh, let's set up a meeting, but we're really, really, really busy." So we set up a meeting for after it was a grocery store, after they'd already opened. And we finally met and I said, okay, great. What is it that you're already handling? Let's make this list. Let's figure out what makes sense for you to do versus us. And they said, well, we want you to file our taxes. I say, okay, great. I'm happy to file your taxes. Let's put some other things on the list. Well, it wasn't until later in the conversation that I realized they were talking about sales taxes, which
Mm,
are monthly, and they had already been open for a couple months, which meant they already had a couple of late sales tax returns. And
hmm
at that point in time in Chicago, when you applied for your sales tax certificate, it was a while before it would be approved. So they had another one that was late before we finally got to that point. But in the client's mind, right, small business owner's mind, we want you to file our taxes. Well,
Right.
how is sales tax not a tax? Right? In
Yeah.
their mind, that's what that means. Well, that's not what it means to me. To me, it means you want me to file your annual income tax return.
Federal. Yep.
Yeah. Or and your state income tax return,
Mm,
as well. But yeah, it's not so making a nice long list of these things can
yeah.
avoid the duplication, but it also avoids things falling between the cracks. One of the things that I've noticed and something that I teach in my tax ready books class um, is that oftentimes bookkeepers are already tying out the balance sheet. When I say tying out or proofing the balance sheet, what I mean by that is you go line by line on the balance sheet and you have made sure that the number that is on the balance sheet for that particular row ties out to some external source. So a bank reconciliation or a credit card reconciliation, as you know, there's the most common. But sales tax liability, since we're talking about sales taxes, would be, does this tie out with the tax return, the sales tax return that we're filing the next month, right? And you might be looking at a liability. Maybe you have a loan out there that's on an amortization schedule. Does the amount on the balance sheet tie out to the amortization schedule? So there are lots of different sources of truth. Usually, hopefully, only one per
Yeah.
line is the way it's supposed to work. Well, oftentimes bookkeepers, they're already doing that, right? They're already making sure they've done all of their work and they have then looked at the financial statements to say, yes, I have done all my work and everything here is correct. And then it goes to the tax preparer. The tax preparer has no documentation. They have no work papers and they have
Mm,
no relationship with that bookkeeper. And there's no accountability chart like we're talking about. There's no list of to-dos and who's doing what. And so the tax preparer, if they're really good, they're going to go in there and they're going to be like, okay, well, I got to make sure that this balance sheet ties out. And guess what they're going to do? They're going to request copies of all of the bank statements and the
right.
loan statements, et cetera, and so on. And they're going to tie all of these things out with their tick marks on their worksheets because tax accountants and auditors, CPAs in
Mm,
general,
I
like
love
love
tick
the heck
marks.
out of our worksheets. And so they're going to actually duplicate everything that the bookkeeper's already done. And so one of the things that I teach in my tax ready bookkeeper class is it's not just about doing it, it's about documenting it.
Mm,
It's about documenting that you've done it. Export that balance sheet to Excel and then write on the line next to, make a column for each one of those lines and say, ties out to the bank reconciliation. Here's where that statement and the rec are
mm,
saved. Ties out to the amortization schedule. Here's where that is saved, et cetera, and so on. And then if you have a relationship, because hopefully the small business owner has set the tone, created a culture where you're acting as a team with the tax preparer and the advisor as well, if that is yet another, party here, then you're going to hand off those work papers to the tax preparer, which is what we do internally at our firm. And the taxpayer goes, oh, good. All of this stuff's already been taken care of, which is an hour or two that they just got back in
mhm,
life during the most challenging time of year when they
mhm,
most need that hour or two back in their life.
mhm,
And so then the small business owner is in a really great position because they've got a bookkeeper who they've been paying on a monthly basis, who takes their job very seriously and has good lines of communication in both directions with the taxpayers. You got a happy bookkeeper. You've got a happy tax preparer who is not going to charge you a late fee or increase your amount that you're paying the next year. You've got your advisor who is thrilled because they can give you some really valuable analysis about, what your business should be doing next. Really forward-looking projections and forecasts about real business decisions that are going to potentially make or break what happens in your life. And they're working off of books that are reliable, that really tell your personal story, right? So when those three people are happy, then the fourth person here, of course, is the business owner.
Mhm.
And they're very happy because they've got a team that's really all keeping an eye on their best interests.
Yeah. Yeah, because it's like, what what does the business owner really get out of making sure that this is a smooth relationship between these different parties? And
Right.
there's a lot of things. Like, I obviously efficiency is one, not having people duplicate it, which can then translate to cost. I think it also reduces stress because
For
there isn't
sure.
those panicky, like, oh my gosh, who's got this? And oh no, I'm not getting any of those like messages from the CPA that are like, your books are a mess. I can't believe this. And then you're gonna get
Well, and half
charged,
the time, the
CPA
anxiety
rates.
is that you haven't heard back from them, right?
Yeah,
I mean, that's
exactly.
it goes in both directions. If you've
Honestly.
got good communication here and you're expecting people to be talking
Mhm.
with each other on a quarterly basis or at least having a year-end recap or something like that. We love doing year-end tax planning with our clients, and we do that in November and December of every year. Again, in our firm, all of these things are happening internally. We're doing the bookkeeping, accounting, tax, and advisory functions all within our firm. But we're not all one person, right? Like we all need to communicate with each other. We have
Mhm.
our challenges and our workflows and, figuring out how to make it work better. Um, so I whether it's internal or it's external, this is definitely something that um, if you're doing that year-end meeting, let's say in November, December, even if you're not doing quarterly, I really encourage quarterly check-ins. I really do, especially for folks who have to pay quarterly estimated taxes,
Mhm.
because generally when the taxpayer is giving that stuff to you, it's based on last year.
Yeah,
And then your position may have changed wildly.
dramatically.
Yeah, it happens a lot.
I've seen
And
that a
then
lot.
you
Yeah.
must, right? And then they get to year end and they say, "Why do I owe so much? I've been making quarterly payments."
Mhm.
Right?
Or the
Maybe they were.
opposite, where they're like, "Why am I having to pay the IRS so much money when I'm making no money?"
Yes.
Which is
Yes.
always a scary
It's
thing. But yes, I think
totally.
quarterly check-ins like give you that, and I think oftentimes if you have a CPA who or your tax accountant, you have to really know, like, are they wanting to check in regularly? Like bookkeeper,
Mhm.
it's a little bit more natural. You're going to have some kind of monthly cadence, usually with a bookkeeper, at a
Yeah.
minimum a quarterly, but usually a monthly cadence. A
Yeah.
CPA, you have to kind of ask for it probably a little bit
Mhm.
more vocally. Some will, like your firm would check in quarterly. You like that. That's a standard, but not all firms will. So, or not
And
all firms do that as standard. Most
have you
will.
heard that the main reason that somebody leaves their tax preparer to go to a different tax preparer is that they weren't getting enough communication? That they actually wanted more communication with the tax preparer and they weren't getting it. And that is the number one reason
Oh,
that people switch tax preparers.
always. I mean, I hear it every single. So one of our questions in our intake form for CFO services, as we ask if they have a CPA who takes care of their accountant or takes care of their taxes, but and then the second question to that is, are you happy with that
Uh,
accounting relationship? And it's
wow.
probably
Good
eighty
intake
percent.
form, Hannah.
80% is unhappy. I
80%?
would say easily 80 to 90%. I have very rarely will I get somebody who's like, yeah, I have a CPA. I love them. Almost never.
Well, all of my clients would say that. But
I
then
know, but I
again,
don't have any of your
they're
clients,
not going to be
Nancy.
applying to work with you. Yes, that's true.
So when I hear that, when I hear somebody that's actually happy with their relationship, it's like, okay, it's usually because they are reachable in some kind of communication, that they are being proactive in some kind of way, and that they, are providing some kind of advisory, tax
Yes.
planning services. These CPAs that are focused on, and I'm going to get a little bit on my soapbox about like these, like just kind of the churn and burn.
I'm
I
ready for
only
it.
maybe don't talk to my clients at all. I'm just like pumping through tax returns,
Mhm.
and still charging, like they are advising. I really have a hard time with that because
Me
they
too.
aren't being a partner to the business owner. They're only providing this compliance service. And usually that compliance part, when you have no communication with the business owner whatsoever, it's probably missing things. Like they're either giving them the wrong tax estimates, or they are not accurately looking at the financials, and they're not asking the right questions. And maybe maybe there were issues with the financials that they should have been, you know,
I
curious
you
about.
you can hang out on that soapbox for the rest of our relationship, because but you have to move over,
Yeah.
because I'm going to join you on there, because I
Okay.
could not agree more.
It's
So just make
frustrating.
room for me on that tiny little soapbox,
Yes,
because
we will make the
um
soapbox bigger.
yeah, because Hannah, and I'm preaching to the choir here. But the goal for the accounting function for each small business owner is ideally getting to the point where you're using the financials to make real-time business decisions
Hmm.
rather than just annual tax compliance. And it it's essential that your books are reflecting what's going on in real life. You can't, like, your books have to tell your unique story, and your bookkeeper and your tax preparer and your advisors, they need to understand your core business. They need to know
Hmm.
your hopes and dreams and
Hmm.
goals. They need to understand your quirks, and your unique characteristics, right? Like, every business is different. So, you again, going back to what I keep saying over and over, you as the business owner, you need to take the time to share your perspective with your team. You can't know what you don't know, and you're relying on them to share with you what you need to know, right? But you also need to show them, tell them, share your information with them so that they know what your goals are, so that they know, you know, it has happened more than once where somebody took on a new member in their partnership and didn't tell me about it.
Right.
And if I were only checking in with them once a year, that would be a real problem, because guess what? We actually now have disproportionate distributions because we're already past the end of the year, and we missed this important opportunity to change the books, or they went from a single member LLC to a multi-member LLC, but they didn't tell me about it. And so if you're checking in with them on a monthly basis, if you're at least reviewing their books on a monthly basis, and at the very, very, very least, I know I keep talking about monthly is great. It's the ideal. Quarterly is better than nothing, and at the very least, meet before year end. Meet in November or December, have a
Yeah.
conversation, get your heads together, let them know. And this is one of the reasons that I really, really, really wish, and here's my soapbox, I really wish tax preparers would be enthusiastic about more communication with the bookkeeper,
Mm, mm.
because it literally makes everyone's life better. Like,
Yeah.
everyone's life will improve if you take the time to, as the tax preparer, to coordinate with the bookkeeper. They're probably into it. There's probably a lot they don't know. Sometimes tax preparers will just roll their eyes because, oh, the bookkeeper didn't do this, and it'll be something that I would put under the purview of tax ready books, right? But maybe that bookkeeper has never learned it. Tax ready books is like not a thing that they teach when you
Right.
learn bookkeeping. That's not something that gets taught. I
It's
don't know
not
why.
in the QuickBooks course.
It's not in the QuickBooks course. It's definitely not in the QuickBooks Pro Advisor certification, although I'm excited to be able to announce that they shared at Jacqueline Anku from Intuit shared at Appy Camp this year that they actually are changing the certification program so that there is going to be some bookkeeping education in there. And I am
Good.
delighted to hear that.
Good.
Really, really delighted. They heard the needs of our industry and they're responding to it. So, but so what the tax preparer needs to do, in my opinion, is instead of rolling their eyes that it wasn't done correctly, reach out to them and say, hey, I noticed this year in the books that X, Y, or Z was missing, or A, B, and C was happening a particular way, and I prefer to see it this way, and here's why. And generally, taxpayers won't do that because it is time consuming.
Mhm.
But it actually is something that can be done during a time of the year when you're not so crazy busy, and then save you time during the time of year when you are so crazy busy. Again, this entire conversation, this year end, at the very least, this November or December check-in, this is something that the small business owner can just say, hey, this is something that is important and I want to do it. And I want the bookkeeper and the taxpayer and the advisor and I to get together and before year end, because there are a lot of things that are really hard to fix
Yeah.
after year end, like reasonable compensation, which is another one of
Yes.
my soapbox
Mm-hmm.
um, items. You and I can share that little soapbox too.
Mm-hmm. Just had a call earlier today about
No.
just someone paying themselves like $36,000 and I don't know, you know,
Oh
you know,
my gosh.
as an S
That's
Corp
actually what I'm
owner.
going to be talking about at Intuit Connect, by the
Oh,
way.
good.
Yeah,
Yes.
yeah. S Corp reasonable compensation.
Yeah, we'll do a podcast episode probably on reasonable compensation because I feel like that's one of those things that people just get wrong and then get wrong information from their CPA. Like
Hmm.
that's the real soapbox thing is
I
like it's
really,
the CPAs that are still spreading bad news about it
yeah.
and having people pay themselves really low W-2 wages and then paying huge distributions on top of that. It's
And something that those taxpayers are not thinking about is that the new IRS rules say that there are that you can actually be held responsible as a tax preparer that prepares an income tax return with insufficient compensation, unreasonable compensation for the S Corp shareholder employee, that there can be preparer penalties
Mhm.
because it is one of those things, in the IRS code, it says if there's something on a tax return that you don't have to audit the the books, you can use what the client gives to you. However, you do have to ask questions. You can't see something that you know is wrong and not ask questions about it. And if that happens more than, you know, if it happens one year and they're a new client and it was too late and what were you going to do about it, then you go to the client and you explain reasonable compensation and you make sure that they change it for the next year. And if they come back to you the next year and they still haven't paid reasonable compensation and you file that return, you can actually be subject to preparer penalties. So
Mhm.
they're doing a disservice to themselves as well as to the small business owner when they
Mhm.
spread misinformation. But it is a very, very, very common area for inaccurate information to be spread all over the place.
Yes. Yes. We will dive deeper into that another time, but yeah, for sure. Let's see. I know that we've gone a lot into the relationship between the CPA and the bookkeeper. What is like a takeaway we talked about for the small business owner? So the small business owner should think about how do I get my team together to like think
Yeah.
about this like team mentality. And I think you mentioned something really important, like to kind of set the culture that way that like
Mhm.
even and it might just need a right fit of this to go back and say like, hey, we've never really operated like this before, but I have this kind of new realization. I'd like you guys as my team. You're my finance team, my bookkeeper, my CPA. You're different companies. Maybe I have a CFO. I want you guys to be thinking like a team. I'd like to get us together for at least an annual meeting so you guys we can all see each other on Zoom. You know,
Mhm.
if you can be in person, awesome. very, very rare these days.
Yeah.
But that's one good thing that we can take away. Is there another like good takeaway for the business owner in this that you can think of that they can help improve this and ultimately help their
Yeah.
finances just run that much smoother?
Yes, I have so many suggestions. But I want to make it clear to any small business owners who are listening, it can be overwhelming to actually think about doing all the things that you could be doing. I get it. You're already running your own firm. I run my own firm too. It's exhausting. I see you, right? So I'm not saying do all of these things, but at the very least, set that tone, have that annual meeting, but there are some other things you can do as well. For example, at that annual meeting, you can go ahead and prepare a list of things that you feel like they should know. For
Mhm.
example, you're going to be expanding or taking on a new revenue stream or opening up a new location, or you changed which lawyer you're working with and that lawyer says you should be doing something, 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 or you're going to be getting a liquor license or moving locations or taking out a major loan. Like, blah, 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 blah.
Hiring employees in a new state,
Hiring employees in
operating
a
in a
new
new state.
state. Oh my gosh. And not just in a new state, but New York or California or one of the states that's like extremely, extremely. I recently had a client who had somebody who was an employee who was local who quit because they were going to move to New York. And then she was like, oh, you know what? I'm just going to hire you as an employee in New York. Well, the kind of work that this person was doing was not employee work at
Mm,
all. It was clearly like one off occasional contractor thing. But because she already had them on the payroll from when they used to live in Illinois, they did this. And I was like, no, we are reversing that. This person is not an employee because the rules for New York are extremely difficult and it objectively was not an employer employee relationship anymore.
right.
So, yes, communicate. So, not only let's have that meeting,
Hmm.
but in that meeting and on a regular cadence, um, send out an email saying, here's what you need to know about my plans because you as the
Hmm.
small business owner may not think that those things have any bearing whatsoever on bookkeeping or taxes or advisory, but they do. You just assume that you don't know what's important and what isn't important and give them a list of everything that's going on, right? Um, so I think that it's not just about having that meeting, it's about what you're bringing to it. And similarly, what are you asking them for? Say to them, I I'm a I'm an architect. I'm not an accountant. I don't know what I don't know. Can you help me put together a list of, what all of the different functions are and who's responsible for each of these functions so that I can be a more effective delegator and manager and know what's going on. So it's not just about having that meeting, but like, what are you bringing to it and what would you like to take from it? There
Hmm.
are a lot of other things that can be done as well. I would encourage you to set clear expectations, bring everyone to the table as early on as possible. Um, Again, you can't assume that anyone else is going to make it a priority. Some of us will, but a lot of them, especially bookkeepers, they're generally taking your lead.
Yeah.
So, ensure that they're communicating with each other even when you're not there. Um, you know, we've talked a little bit about establishing which roles and responsibilities there are, but also what are those deadlines and the deliverables
Hmm.
that are associated with those responsibilities so that you can say, hey, did X, Y, or Z get taken care of? If not, what can I do as the business owner to move that along? Are you waiting on me? Are you waiting on each other, et cetera, and so on? I mean,
Hmm.
it's all when I say it out loud, I'm like, well, those are some pretty basic communication skills, but
Hmm.
I, I can tell you
But
over and
most
over and over
people
again,
aren't
yeah,
having those conversations.
no,
Yeah.
they're really not. There are also different tools you can use, right? If you're uncomfortable having the regular Zoom or in-person check-in, that's okay. Google Sheets. is a really good way to track some of this stuff, or a shared folder or doc in Dropbox or whatever file server you're using. A lot of bookkeepers and tax pros are using some sort of project management software internally. And so let's say you've got the tax preparer and the bookkeeper talking to each other.
Mhm.
Say, hey, do the two of you want to make sure you're added to the other person's project management software? For example, we use Keeper internally, which we absolutely love. I know a lot of people use Financial Sense.
Mhm.
Um, a lot of people use Asana. Some people will just use a really basic database like Airtable.
Mhm.
Whatever it is that you're using, it's usually not expensive, or it's free. Like with Keeper, it's per client, it's not per team member, right? So you can just add the tax preparer to your Keeper account and
Mhm.
assign them things for each quarter or each, uh, when you have questions, you can submit questions to them and tag them as if they're a member of your team. So basically leveraging whatever technology already
Yeah.
exists. You don't have to reinvent that wheel. Most folks ask what they're already using and piggyback on that, or suggest something that your business is using internally that you're already
Mhm.
comfortable with, and ask if they'd be comfortable using that. So I think technology can fill a lot of gaps here.
Yeah, that's a good point for sure.
I also think that again, this goes back to some pretty basic communication skills, but maybe one of the harder ones to use is just being transparent and honest. I've been doing this 23 years, and that's just 23 years running my own firm, right? I was working for other businesses before then. I just gave away that I am much older than than I look, right? So, it's amazing through the years, the things that folks have held off on telling me, like
Mhm.
something really important about their business because they were ashamed. And I really encourage you. I know, you were mentioning earlier offline that your father is a client of yours.
Mhm.
I've had family members as clients who, because it was a family relationship, like not tell me that they were really behind on sales tax.
Yeah.
Yeah. And that wasn't something that we were taking care of for them. And the way that it was being logged, because they were always behind, we couldn't see what was going on. Um, and I was just like, hey, you got to let go of that, right? Like, because I'm here to help you.
Mhm.
And I I say this a lot to people when they first onboard with us and they're like maybe embarrassed about what state their books are in. I
Mhm.
will tell them, I promise that unless you are literally the worst client on earth, literally the last one, I have seen it before.
Yeah.
I've seen it before. Okay. Our goal is to fix it
Mhm.
and prevent it from happening again. So
Yeah.
be transparent as the business owner, be transparent and honest with these people on your team, because the reason they're on your team is that they want to help you. And I think that that is, it sounds obvious, but
Yeah.
it's actually the source of a lot of problems. I'm guessing you have some pretty frustrating stories in
Yeah.
that
I
area
think
as well.
I mean, finances bring up so many emotions oftentimes. There's a lot of shame, like you mentioned, and shame, especially around debt, I find where
Hmm.
maybe like a loan hasn't been recorded because the people like potentially just don't even want to really truly believe it exists and
Yes.
wish that they had never taken it out and maybe feel a lot of shame about it. And then it's just not even on the balance sheet. So that's actually another intake question that we have. Is there any outstanding debts that aren't currently recorded
Sometimes they
on?
won't even realize it's a loan,
Yeah.
especially with some of the more predatory practices for,
Yes.
we work with a lot of like restaurants and bars and cafes. And if you have a point of sale system,
Yeah.
then so I'm going to throw Square under
Toast
the
or
bus
Square.
here.
Yeah.
And yeah, exactly. They will constantly be like, are you having trouble making payroll? That's okay. You can
Uh-huh.
take a loan from us and we'll just take out a little bit each day from your settlement,
Yep.
from your credit card settlement. And that sounds like a really good idea. And I had a client some years ago who had done this. I actually did an article for the Journal of Accountancy a while back on predatory lending practices and what we've seen happen to various small businesses. And in this particular situation, they didn't think of themselves as having a loan,
Yeah.
right? And
Yeah.
so we started noticing that their settlement that was coming in every day was not clearing out the suspense account. The suspense account kept like growing, and we're like, what's going on here? And we eventually got down to the bottom of it. And when I calculated what their effective interest rate was on it, oh my gosh.
I don't even,
If
I do want to
if
know.
yeah, no, it was over 200%.
No.
Yeah,
Oh
it
my
was
God.
horrible.
That
And
is
there was nothing
hefty.
illegal about it because the I'm trying to remember the name. It's in the Journal of Accountancy article. But the name of what Square had said it was like a receivables factoring agreement, I
Yeah.
believe is what it was called. And
Hmm.
so it wasn't actually a loan, and so it didn't fall under predatory lending practices, and there was nothing we could do about it. Yeah, it was rough. It was really rough. We were able to get them, and this is something that I bet a lot of small business owners don't realize. Your bookkeeper, your advisor, your financial advisor, your tax preparer, often these folks have resources that they can send you to for financing. They might know
Mhm.
somebody who specializes in lending that they can connect you with as a referral partner of theirs, or they might know, they might work with Fundbox or one of the, fintech companies that will help. I work with Biz2 Credit through the AI CPA. And that is why we had such great experiences with our second round of the PPP, is that I had
Yeah.
everybody in a dashboard there. And, we had dedicated folks that we could talk to there. But they also do SBA loans, and they do lots of other loans, and they can look at something that is going to be a lot less expensive than a predatory loan, like what we
Yeah.
were just talking about. And you could refinance that and pay off. And that's what we ended up doing. We got them a loan that they used to pay off the other loan. And then, we're able to, it was still a high interest rate, but it wasn't nearly as
Yeah.
bad.
Not
But I,
200%.
no, and I've seen people do this with like loan after loan
Yeah.
after loan
Yeah.
after loan, and they get into a cycle. And yeah, so you have to discuss these challenges openly. You're right.
Yeah.
Debt is scary and weird and
Yeah.
makes us clam up when maybe we shouldn't. I also wanted to mention that organizing your financial documents is actually one of the best things you could possibly do for your team. Work with your bookkeeper and your tax preparer to make your documents accessible and organized. And that could be like I mentioned that we use Keeper. Some people use Uncat for answering questions about uncategorized transactions, or attaching like your receipts directly to QBO transactions.
Mhm.
A lot of folks use Dext for that, or you can do it
Mhm.
directly in with the QBO mobile app, so that the small business owner can actually take a picture of the receipt with
Mhm.
their mobile app, like with their phone, and it immediately uploads into QBO, and then your bookkeeper can find it, and they don't have to ask you as many questions about what the heck did you spend that money on. Um, you using a bill pay system, or a fintech bank like Relay. I know that Deanna was on your
Mhm.
podcast
Yep.
recently. I'm a huge fan of Relay.
Yeah.
Absolutely adore them. They also have some really great bill pay features in it
Yeah.
as well. But the key here is that like whatever solution you're using to organize these financial documents, all of these different functions, the business owner, the bookkeeper, accountant, taxpayer, advisor, right? Like all of the different functions there, they all need to know what solution you're using
Hmm.
so that they can find the backup, or so that they can find the work papers. Like I was saying earlier, just having done it isn't enough. You have to document that you've done it, and you have to
Right.
communicate that you've done it.
Right.
Often a business owner, like the bookkeepers, they don't realize the importance of communicating that something is done, because it's being done is enough, but that's not the case. And Yeah, so that
Yeah.
that kind of thing is really important.
Super helpful.
Yeah.
Nancy, I think we're going to have to wrap up, unfortunately, but I
No,
think
I want to
that
spend the
this is,
rest of the day hanging out with you, Hannah. This
I
has
mean,
been too much fun.
we can, um, but
We
I
just have to
like,
stop the record button, I guess, at some point.
yeah, at some
Yeah.
point, I suppose. So if people want to learn more from you, they can go to thedancingaccountant.com.
Yes. And I'm
Um,
also very active on LinkedIn. So that
yes.
is a place that you can follow me. I'm Nancy dash McClelland dash CPA.
Nice.
And on Twitter, I'm the Dancing CPA. And also, I should probably point out that at thedancingaccountant.com, you mentioned my award-winning blog, but I also have a column on MSN. So follow me over there as well.
Well, there you go. She's all over
Yeah.
the place, folks. You can find
Yeah.
her. And
I'm
then
all over the place.
if you want to connect directly with her on LinkedIn, like be sure to say like, "Hey, I heard you on the Financial Clarity podcast." Because I know both you and I probably get a lot of just spammy requests that
Yes.
happen. And I have gotten to a place on LinkedIn where if somebody doesn't give me a comment or I don't immediately recognize their name because I've talked to them in person, I don't respond.
I'm
'Cause
exactly the same way.
I,
Absolutely.
it's just too
Also,
much.
if you have something I want to mention to small business owners who might be listening to this, if you have a bookkeeper, whether they're internal or outsourced, who want to learn about how to prepare tax ready books and better collaborate with taxpayers, shoot me a note. I actually have an email address that's specifically for this, which is askacpa, at thedancingaccountant.com. And we can send
Nice.
you information on how you can join our community or what speaking events we have coming up where we're going to be talking about being tax ready with your bookkeeping.
Yeah. Yeah. Because small business owners might be listening to this, but you might be thinking, like, hey, I know that this has been a problem in the past. How can we do better next time? So thank you
Yeah.
for that. I appreciate that. And
Sure. Thank you.
there's lots of good information there. So, all right, Nancy, thank you so much for being here.
Thank you so much for inviting me to be here, Hannah. It is always such a pleasure to talk with you.
Yeah, we'll have to find another excuse to have you back on the podcast because I
I
know there's
think
lots
that
of
that
things we
would
could
be
talk about.
wonderful. We can hang out on that little soapbox together.
I love it. All right. Thanks, Nancy.
Thank you. Have a great one.
Thanks for listening to the Financial Clarity Podcast. Be sure to check out the show notes to learn more about today's episode and click subscribe on your favorite podcast app.